Hello, 361 fellows. Very happy New Year from snowy New York at the beginning of January. Wanda Lopush here with predictions for 2022. I am corporate board director. I am advisor in the area of governance, risk, ESG. I'm also an investor. I'm very much interested in transformative technologies, green and clean mobility, everything from the EVs, batteries, to autonomous vehicles, wireless charging. Today, I'd like to share my predictions in the area of ESG, environmental, social, and governance framework development. ESG is the proxy for accountability in transitioning the economy into net zero and delivering on aspirations as presented in the Sustainable Development Goals. Sustainable Development Goals, or SDGs, were introduced with big fanfares in the late 2015 after an unprecedented effort that led to a document to be signed by 192 countries. That document represented the aspiration for the world faced with many challenges for the next 15 years. One of the existential challenges is the climate change. So 1 year later, in 2016, the Paris Accord was signed by the smaller number of participants. Nevertheless, the excitement was very high. For the execution of the Paris Accord and Sustainable Development Goals, there are roughly three segments that must collaborate: public sector, private sector, capital markets. I will be making my predictions using those three general segments of the market. Starting with the private sector. In the US, the adoption of ESG takes place on a voluntary basis, which is not the case in Europe and in Asian markets. I do not expect the US to follow the European trends. The disclosures will be still voluntary, though there are more and more guidelines. As of October last year, SEC introduced guidelines for climate and ESG disclosure for public companies. Those guidelines are enforced by exchanges that issue their own guidelines, if not regulations, for the companies to be listed with regard to ESG in areas such as climate action, in areas such as diversity and inclusion. The importance of rating agencies will increase. Agencies such as Bloomberg, such as Moody's and CSI. And the reason for that is such that for investors, ESG scores is becoming a proxy for the risk. Therefore, the cost of money, cost of capital is related to the risk. Moody was the first company that introduced that correlation in 2019, and just about every big lender follows that path. The final prediction in this space is regarding the carbon pricing. Carbon pricing is not expected to be required standard in accounting, although according to CDP, last year, half of the largest 500 global companies have already implemented internal carbon tax or carbon accounting. What that means is that price on carbon is being part of the balance sheet. Among the brand names in the US, we have Microsoft, Salesforce, Apple, who have carbon pricing included in their internal accounting. Globally, Volvo is one of the latest companies who announced the carbon accounting in their internal procedure at the relatively high price level. So in a summary to the private sector, I am optimistic about the transition. We have methodologies, we have ESG framework that help us to understand the pace of the transition, the speed of the transition, and brings accountability to business discussions. Is that pace sufficient to address the global challenges? That's another question. The second segment is the capital market. Investors with the long-term horizon, 20, 30 years, such as pension funds, sovereign funds, they recognize the existential nature of climate change as the risk factor. Therefore, they will continue to press their investment targets for disclosure and transparency with regard to climate actions. We also expect that in this proxy season, the institutional investors will cast more frequently their votes for the shareholders' proposals that will address E and S issues. Typically, the institutional investors voted with the management. We expect that it not always will be the case in this incoming proxy season. The midterm and short-term investors will navigate the gray space of private companies where the guidelines are not as strong as for the public companies. There will be more wiggle room for creativity, although we will not get back to the golden age of greenwashing of 2016 and 2017. Self-policing in the financial sector in the US is much weaker than in business, partially because the rewards are so much higher in the financial sector. We are experiencing an unprecedented inflow of retail investment from retail investors who want to put their money into transformation, into certain purposes. Money managers, asset managers, in an effort to attract that money, again, will walk the fine line between aspirations and facts. They may say that, this fund is very green and clean. However, when I ran it through the basic filter, such as FFF.org or fossilfreefuel.org, it turned out that the green color of this fund was more of the color of my black lab in terms of CO2 emission. More subtle greenwashing and ESG-washing will continue in this gray area of private companies. These games of creative marketing will continue to be played in various forms and shapes, although it will be more difficult. Last year, SEC created the task force on the climate disclosure and ESG in their enforcement division, with the single goal to identify those who use misleading statements to attract individual investors to the funds. So my prediction is that we will hear this year about few bad apples in this space with the attempt to send the message to the market, though that message will not be very strong because the enforcement does not have a really strong stick to police the market. Again, I don't expect the US to follow the European market. We stick to the guidelines. The private company sector will be only very loosely regulated. However, for those entities who want to play an international arena, they will have to adopt ESG as the compliance necessity. Now, moving to the third sector, the public sector, where I am least optimistic. This past year, COP26 in Glasgow was expected to deliver a significant agreement on eliminating fossil fuels by 2050 or 2060. After extremely intense negotiations, on 11 hours, the language of the agreement was significantly watered down on the request of India, with support to China, pretty much stating that fossil fuels will not be totally eliminated, will be just scaled down, which we know from the scientists that that's most likely not enough to keep the temperature under 2 C. In 2022, I do not see a global leadership that would champion the cause of the climate action. China is too preoccupied with its own growth challenges. India is unwilling to switch its course into carbon-free economy. The US is involved in its bipartisan politics where the climate became a political football. This year, COP27 that is going to take place in Egypt most likely will not bring any decisive global agreements either. The Glasgow summit was summarized by Greta Thunberg, the youth activist from Sweden, in this very eloquent way. Blah, 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 blah. I am afraid, and I'm predicting that Egypt COP27 will be summarized in the same way. So I am not optimistic about the progress of accountability in the public sector, which puts even more demand on private sector and on capital markets. Which brings me to my asks. Here are my 3 asks. Number 1, please do not fall into the trap of being greenwashed. If something sounds too green, perhaps it is. So ask questions, challenge the statements. We have methodologies that are based on the facts and data. Ask for the data. Number 2, subconsciously or consciously do not become a part of the echo chamber for the big greenwashers. And number 3, when deploying the capital with purpose, upon deployment, do not leave this capital. There are mechanisms to oversee how the execution of the projects are going. Utilize those methodologies, stay on the course, and when corrective action is needed, do not be afraid to take that corrective action. With that, very healthy, happy, and transformative 2022, everyone.